Welcome to www.thebig4accountingfirms.com podcast. Today I wanted to discuss a number of things. First off, let's give an update on the Pwc Acquisition of Ge. As you know from our podcast last week, PwC acquired GE's tax department. That acquisition included PwC employing 600 GE employees. Now there was additional news that came out on Friday. And in that news, PwC announced that there's going to be a revenue share with GE. What this means is that any revenue earned by GE employees doing tax work for PwC will be shared with GE. The exact percentages were not disclosed in the release that was released on Friday, but they said that it will be a significant amount of money. Mark Mandola even went so far in the press release to say that PwC could earn in excess of $1 billion a year. Now, this is the part that I really wanted to speak on because that math doesn't really add up to me. $1 billion a year over 600 employees means that PwC has to earn about $1.7 million from each employee. There's a number of reasons I don't think this is possible. In order to earn $1.7 million, those employees have to be fully utilized for at least 2,000 hours a year, and that's at a rate per hour of $800. Now, I don't know many people at the Big Four that have a rate per hour of $800 other than partners. And I know the GE tax department is full of talented people, but I don't think all of them are at the partner level. This deal did not make sense to me in the beginning, but now that PwC's estimating they're going to make $1 billion a year off of this, it becomes even more suspicious to me. They're just throwing numbers out there now to improve their own image. I think they're using this deal to make it seem like they have the state-of-the-art tax department, when I think it's probably anything but. I think PwC was forced into this GE deal. I think GE gave them an ultimatum saying, you either do this deal or you lose all of our tax work, because we'll give our tax department to, EY or Deloitte. They obviously couldn't give it to Kpmg because of independence issues. But now that PwC is rushing to every newspaper talking about how great of a deal this is, I'm really beginning to doubt how good it is for them. I think that GE is the smarter company here, and I think they're going to come out on top. All the press releases have been saying that GE was looking to downsize the department, and this could save them upwards of $100 million a year in payroll. And I think that's really what they were looking for here. But now they get to downsize their payroll, but they also get to the upside of revenue. I don't think that's what PwC understands, is that GE wins both ways. GE gets to get rid of the employees they no longer wanted because PwC has such high turnover that there will be plenty of GE employees that leave. So GE wins that way. But also, not only does GE get to get rid of those people, they also get to share in any revenue that PwC makes off of these. And PwC loses because they thought they're going to get 600 employees theoretically getting billed out 100%, when that won't be what really happens. PwC will have to pay these people their full salaries while also trying to utilize them. They don't know anything about these people, and they're going to sit there and say, we're going to get them utilized from day one. But simultaneously, they're also going to have to tell their own people, their own PwC employees, don't leave, because you might be thinking about leaving because these GE people are going to replace what you do. They have to say, oh, these GE people aren't going to replace what you do. These GE people are going to work only on GE and won't be working on your clients. But then PwC turns right around to the media and says, they're going to work on so many clients that they're going to make us $1 billion a year. So I think PwC is tripping over their feet over this deal, and they're not really looking at it and making sure that they're going to win somehow in this deal, and that they aren't going to come out the losers at the end of this 5 years. And that GE is going to be so happy with, the number of employees that are left, because so many will have left, and the deal that they're just going to, they'll be fine taking their employees back because there'll be way less employees. Okay, that's really all I wanted to cover about the GE deal. Now I wanted to talk about Kpmg's new training center. Kpmg announced earlier in 2017 that they're going to be building a state-of-the-art training facility in Orlando. And this training facility is going to have 800 rooms, and it's going to have a fitness center, outdoor recreational center, you name it. Anything that, training facility you'd expect from a training facility. Now, what I wanted to cover about this is we see this as sort of a trend in Big Four firms. Deloitte was first with Deloitte University, and PwC has similar programs in that they have the Discover program where senior associates go out to California and to these resorts. But all the Big Four firms have humongous national trainings, and oftentimes they're in hotels in Orlando, many other places like Atlanta and Virginia, but they have to work out deals with resorts and hotel chains, and they do that every year, and I'm sure those costs aren't decreasing. So now they're building these huge training facilities so that they can have some say over the cost, how many employees work there servicing this training facility, and they don't have to work with hotel chains every year decorating the hotel for the training facility, getting the projectors up and running, making sure there's projectors in every room, the Wi-Fi. They're going to be able to control what is going on in these training facilities and hopefully control costs for training. So the cost would keep on increasing because all of the Big Four accounting firms are constantly increasing the number of employees they have. So having your own training facility allows you to be able to more accurately budget training costs. And I think it's interesting that Kpmg is doing this, and I do look for the other Big Four firms to do something similar as well. It'll be interesting to see how far they take it, right? If it's just the training facility, or will it soon be transportation? Will the Big Four have their own transportation to and from the airport? Will the Big Four have their own airplanes to transport their employees? I mean, all these costs are costs that keep on going up as you increase employees. So we'll look forward to keeping up to date on that. Make sure to check out our blog to also get more detail on the GE acquisition by PwC and also the Kpmg training facility. Visit our website at www.thebig4accountingfirms.com, and also give this podcast a review if you like it. You can also subscribe to our newsletter on our website. So make sure to do all those things when you get a chance. That's all we have for today. Thanks for listening.